All right, says we are live. I see absolutely nothing on my screen. Been having a lot of technical difficulties in the last 10 or 15 minutes, even trying to get the screen. I think it's reading what I'm talking about with China, YouTube's censorship software. This video is 100% going to get demonetized. I do not care at this point. I'm going to speak my mind. So, is China's economy back to 90% pre-coronavirus levels? Now, I don't believe this, but there are a lot of Western financial professionals on Wall Street that think China's recovery is legitimately restarting. I know because I've seen them post it on financial Twitter in the last week, that Hubei province is 90% back manufacturing and economy-wise to pre-coronavirus levels. Nuts. No freaking way. Okay, the guy Kubiko, who is I guess, former hedge fund manager. I don't know who the guy really is, but he used to work on Wall Street. He knows a lot about finance, but he said he spoke to a Chinese businessman from Hubei province, and that's what he was told, and he believes it. I don't believe it. Sounds like he was duped. Normal type of dupe, but towards Westerners. Okay, so let me talk about proof why China's economy is nowhere near 90% pre-coronavirus levels. So first off, let's talk about commodity prices, because if China's economy was actually restarting rapidly, the oil price would probably not be falling. So the oil price is falling a lot. It got almost down to $21 a couple days ago. It's looking like it's going to be below 20 probably in the next week or so, give or take. Normally not a sign that China's economy is recovering back to 90% pre-coronavirus levels. The copper price, oh my god, the copper price. My Patreon account contributors got some additional analysis on this behind the paywall, but the copper price has absolutely crashed in the last month. The copper price was at $2.60 a pound on March 2nd. It is now barely holding $2.10 a pound at $2.15 a pound. Again, not normally a sign that China's economy is at 90% levels pre-coronavirus. Also, as I don't know if you can even see this on your screen because this may have been censored out, but there was an article that Zero Hedge ran recently saying Beijing's claim of no new infections contradicts reality on the ground. And this data is from China Mobile. That's 8.116 million users in January and February. This is from Jennifer Zhang, who is doing amazing work on her Twitter feed. I think she's over 100,000 Twitter followers now. And China Mobile has lost over 8 million users. So there's only a couple reasons for an explanation. Number one, the people in China can't pay their cell phone bill. Could be some of them. Although unlikely that all 8 million couldn't pay their cell phone bill, considering they need their cell phone to buy food with QR codes. So it's probably unlikely that 8 million can't pay their cell phone bill. Or they're dead. A lot of them are dead. Or a combination of the two. Maybe they switch cell phone carriers, but China Mobile has a very large market share in China. So not likely that millions of people all decided to switch away from China Mobile. So that's another data point there, that China's economy is not back to 90% pre-coronavirus levels. And yes, there are people in mainstream finance, professionals, who actually believe that nonsense. I'm guessing that they got maybe a trip. Oh, no trip. Maybe they were promised a trip in the future. Normally the Chinese government likes to offer, lavish trips. Maybe they were promised a trip a year or 2 years from now when the dust settles and we're through this global pandemic stuff. But they are posting this. People with large Twitter followings are posting that China has recovered. I also spoke to contacts that I met recently, financial professionals who have spouses working in the fashion industry, who know fashion suppliers, and I was hearing that a good amount of the factories in China that produce garments and other things are at most 50% back to normal pre-coronavirus production levels. And that's optimistic in a lot of cases. But what is worrisome is that there is now smaller amounts of people get a second and third wave of people getting reinfected in different cities with the global pandemic. So all these things are happening, And meanwhile, a lot of Westerners are getting duped. But the commodity prices are key, because if China was back to normal levels, the Chinese government and other private sector Chinese businesses would be stockpiling copper. It is normally a staple of a healthy Chinese economy to accumulate massive amounts of copper. They accumulate more copper than they accumulate gold, and that keeps the copper price high. The copper price is artificially propped up by Chinese demand. China makes up 50% of demand for the copper market. So the copper bulls out there saying that electric vehicle demand will drive the global demand for copper are not accounting for the fact if the Chinese economy drastically slows down or the Chinese government runs out of new infrastructure or building projects, because they've already pulled, the Chinese government has, through economic central planning, already pulled at least 70 years of demand for copper forward into only about 15 or 20 years. So it's not realistic to expect massive amounts of copper demand out of China to maintain levels like this. And to expect electric vehicles to replace historically unprecedented demand for copper. I need to mention this historical reference here. So the amount of copper that the U.S. used to industrialize over like 100-something year period, like 120-year period, China used more than that in 15 years. So to put things into perspective, China used an insane amount of cement, an insane amount of steel, an insane amount of iron ore, an insane amount of copper, an insane amount of base metals, and these genius Wall Street analysts that are making way too much money are projecting that China will maintain pretty much similar or grow their demand levels for copper going forward, and that electric vehicle demand will increase demand for copper on top of that too. So now you see why I am not bullish copper, why I was predicting that copper was going to have some problems. Now at a certain point though, there will be, with this demand destruction, there will be supply destruction, and then copper will rally. It depends how much copper comes offline, copper production comes offline. It depends how many copper miners go bankrupt and how many mines get shut down. So not really good long-term supply-demand fundamentals for copper right now, because China has pulled so much demand forward in only the last 15 or 20 years. The time to be in copper was 15 or 20 years ago. That was the time to be in copper. Or in 2008 and 9, after everything crashed, when China announced a massive stimulus package. They still had enormous dollar reserves back then. They could technically, my friend who is in Wuhan has said that they will try another stimulus package. This time they don't really have the dollars to do it. Chris Martenson was just talking on a recent video about basically in the last 2 months, the data was coming out that Chinese companies had borrowed $66 billion of dollar bonds in the last 12 months. It was nuts how much dollar-denominated debt Chinese companies had borrowed. So Jennifer Zhang has the commodity prices. If China was really recovering, you would not see oil refiners. This is a story I'll talk about on another show more in depth with the oil market, because there's the amount of oil stories coming out is crazy. And I don't think we're anywhere near a bottom. Oil is still a falling knife. I think probably in the next week or two we're going to go below 20, barring some type of miracle, some type of production cuts by OPEC or Russia or Texas oil production, because the Texas Railroad Commission was talking about cutting oil production. Unless something like that happens, I think oil is almost definitely heading lower, because demand for oil now in the US and European Union is now starting to fall a lot as well. So not only has demand for oil, gasoline and oil for China not really come back, the traffic data, I was speaking with financial professionals on Twitter a couple hours ago, and they're telling me there's a website, TomTom, I think the website is, that tracks traffic in China, and the traffic data for Wuhan is not good at all, but the traffic data for some of the other major cities in China is improving. So I don't think it's anywhere near the pre-coronavirus levels, but So demand for oil and gasoline and jet fuel is still down a lot. People are not traveling. Goods and services are not moving freely all across the globe. But this story is about how oil refiners in the US and Europe are so worried that they're willing to discount their products. So this is really rare. So not only are oil prices still falling, but now oil refiners in the European Union and the US are starting to discount to move more stuff, which means they're just trying to get rid of it. There's no way they're going to make a profit. They're just trying to get rid of it at this point. That's how bad things are in the oil market. Just saw another story about how tens of thousands are going to be losing their jobs in Texas and Oklahoma. There will be more blood. Barring a miracle, there will be a lot more blood. And unfortunately, I expect the same thing for copper, barring another miracle. Because if the Chinese economy is running right, they accumulate more copper than gold. And if you're not familiar with what they do with copper, they actually manipulate the copper price higher. And then copper is used in the Chinese economy in a lot of different ways as collateral. And so a bunch of copper in a warehouse in China will be used as collateral and hypothecated and rehypothecated a bunch of different times by a bunch of different businesses and state-owned enterprises. There's a bunch of articles about this over the last 10 years. So it's in China's interest normally when their economy is functioning properly, and given how much economic central planning China is doing, that's debatable that their economy can actually function properly. Normally, the copper price is held up, propped up, manipulated artificially high, and that is because copper is used as collateral by so many Chinese businesses throughout the Chinese economy. So for the copper price to be crashing like this, that's causing even more pain in China, besides the dollar-denominated debt. So all those firms that were using copper as collateral that had it hypothecated and rehypothecated, those companies are in trouble too. So not just a dollar-denominated debt. Okay, another story that came out besides the China Mobile, and I think that one's pretty damning, but this story came out in the last couple weeks, is the lights are on but no one's working. There was two different exposés that covered this. One of them was the Daily Mail from Whistleblowers by William Cole on March 7th, 2020. So Chinese business leaders leave lights on at work to fake country's recovery from coronavirus so they don't fall foul of government officials. Whistleblowers claim Chinese business leaders are faking workforce recovery. Companies are leaving machinery and lights on because officials are checking power consumption levels. Zhejiang province has restored 98.6% of its pre-coronavirus work capacity. So it doesn't sound it's a 98.6 with the electricity on. They would have a rather small bit of money on power than irritate. They would rather waste. The grammar here is really bad in the article. They would rather waste a small bit of money on power than irritate local government officials. Whistleblowers in China have claimed that business leaders are faking the success of the country's recovery from the coronavirus outbreak to appease government officials. Sources in affected provinces have reported bosses leaving lights and machinery on to create an atmosphere of business as usual. The country's leadership has come under heavy criticism for their mishandling of the situation and lack of transparency about the viruses. I don't know why they called it a disease here. Viruses progression. The mistakes in this article are pretty epic. China, where the new virus first emerged in December. Actually, it came on before December, but most people credit December. Chris Martenson has said it could have started as early as October. Has confirmed more than 80,000 cases, by far the most in the world. Well, now I think Italy has more dead because China's numbers are that bogus. It's more likely that 80,000 died in China than only 80,000 got infected. I think they're only reporting for the official Chinese government numbers. I think they're only reporting like a 30 new cases per day of infected. Either they're changing the definitions or moving the goalposts, or this is just ridiculous. There's actually a lot of people in the West who believe the numbers. I hear it on the mainstream media here in the West all the time. I don't know if those mainstream media press people are on the Chinese government payroll or they're just useful idiots and they're duped. Maybe both. Maybe it's a combination of the two. Maybe some people are both. Reports of 99 new cases. Okay, I'll skip that part. Message of an upswing in recovery efforts has been emphasized by Beijing in recent days, with claims of businesses even appearing to be headed back to work. Beijing has spent much of the outbreak pushing districts to carry on business as usual, with some local governments subsidizing electricity costs and even installing mandatory productivity quotas. Zhejiang, a province east of the epicenter city of Wuhan, was claiming 2 weeks ago that it had restored 98.6% of its pre-coronavirus work capacity, according to Caixin Global, which is a very good press website that covers a lot of independent journalist website that covers a lot of the Chinese economy. However, it has since been claimed that businesses are faking these numbers after officials imposed mandatory quotas. Beijing has started checking Zhejiang businesses' electricity consumption levels, so district officials ordered the companies to start leaving their lights and machinery on all day to drive the numbers up, one civil servant said. But according to the Chinese media source, business owners would rather waste a small amount of money on power than irritate local government officials. In Wuhan, officials have tried to make it appear that recovery efforts were going smoothly. But when central leaders personally survey disinfecting regimens and food delivery, local officials make a special effort for them and them alone, one resident told Caixin. Quarantine residents in the town were captured on camera yelling "fake, fake" at a group of Beijing officials, as they said authorities had neglected their daily needs. The footage captures a government team led by Sun Chunlan, the Chinese vice premier, touring the isolated complex in Qinshan district of Wuhan yesterday. The officials were there to examine the anti-coronavirus operations carried out by local authorities, according to Chinese state-run media. The compound residents can be... Well, I almost spilled my glass of water there. That would have been bad. The compound residents can be heard in a video shouting, "People are paying for overpriced food, and it's all fake," from their flat windows. I have other articles here about coronavirus devastates China's economy and the nightmare is not over. This is from CNN Business by their China correspondent Laura Hay from earlier this week on March 16th. China's economy was devastated by the novel coronavirus outbreak in the first 2 months of the year, according to data published Monday, and analysts say the nightmare is far from over. The collapse in activity affected every sector of the world's second biggest economy, as the epidemic and draconian measures designed to contain it delivered an unprecedented shock that is now being replicated around the world. We are in a very, very unprecedented period of time. Adrian Zurcher, head of Asia Pacific Asset Allocation at Chief Investment Office of UBS, told CNN Business. Retail sales in China, plunged 20.5% during January and February over the same period in 2019. Industrial output was down 13.5%, and fixed asset investment fell by nearly 25%, according to the National Bureau of Statistics. And yet you have people, financial professionals, or former financial professionals, maybe they're rich and retiring on an island, in a mansion in the Bahamas or something. I know there's a lot of people on Twitter like that in the financial Twitter, repeating that China is back to 90% levels. All three data points were much weaker than analysts were expecting, and the decline in industrial production was the sharpest contraction on record. If China was back to normal levels, you would see oil demand really, really pick up. You would see copper demand really, really pick up. I think you will see those rally first. That would be my educated guess. The data for March could be even worse. Quote, the slump in February was diluted in the Chinese data by being average with January, when most of the disruptions were yet to be felt, said Julian Evans Pritchard, senior China economist for Capital Economics. Larry Hu, chief China economist for Macquarie Group, said his, quote, best guess is China's 14 trillion economy will contract by 6% in the first quarter compared with the same period a year ago. Quote, now it is clear it would be the worst in almost 50 years, he said. The last time China experienced a shrinking economy was in 1976, when Communist Party leader Mao, his death ended a decade-long social and economic tumult in China. The hit to the Chinese economy in the first quarter was devastating, according to Ting Lu, chief China economist for Nomura. In our view, the only question is how negative Q1 2020 GDP will be. The Chinese government has been trying to get the economy moving again by encouraging companies to return to work, albeit under strict conditions aimed at preventing an upsurge in the number of coronavirus cases, which I've heard anecdotally, and China Uncensored is now reporting in a new video. I will try to put that link at the end of the show, that there are outbreaks again. So China Uncensored which has a lot of contacts in China, they get a lot of information brought to them, is reporting that smaller and medium-sized outbreaks all over China are occurring again. And this is because it makes sense. There's mass gatherings back at factories. The National Bureau of Statistics said the economy may improve in the second quarter as businesses return to work and as various policy measures, including interest rate cuts, liquidity injections, hundreds of billions of liquidity injections, because that's what China did in just the last couple months, and cuts to taxes and fees filter through the economy. But analysts said the recovery is likely to be very weak given a spike in Chinese unemployment, which will depress consumer spending and the global spread of the virus, which will hold back exports even as factories return to normal operations. I mean, at best, the factories right now, according to what I've heard, are 50%, many of them. Some of them may be a little bit more than that. Some of them may be a little bit less. Also, and I want to share this from another source I spoke to, and this is how the slowdown in China's economy before the coronavirus is that in Fujian, where China has a lot of shoe factories for like Nike and Adidas, the Adidas CEO right now is claiming that they are 100% on their factories. I haven't looked at their data, their math, to confirm if that's true or not, or if he's just, blowing smoke up our rears and he's totally full of shit. But based on what I heard from someone who was living in Fujian, that the shoe factories there, business was so sparse that the shoe factories, a lot of them in Fujian, were working for 1 month. This was 2019 when I was getting this information. This was months prior to the coronavirus. So the factories in Fujian, the shoe factories that make Nike and Adidas and Reebok and some of the others, and Under Armour shoes, they were working for 1 month on and 1 month off. 1 month on and 1 month off. So normally, if you're running a factory, normally you don't do those things. Okay? So the Chinese government was probably subsidizing that. The factory owners were probably not having loans called in. I've covered this ad nauseum. Tony Nash, who lived in Asia for over a decade and was a very highly paid consultant. He has a very good global supply chain company. I interviewed him in December. Go back into the archives and listen to the Tony Nash interview, and we discussed the global supply chain. We discussed how Chinese manufacturers are routinely subsidized and get bailouts. Really good interview from Tony Nash. I may have him on again in the near future. I was actually debating having him back on, asking him about the global supply chain, how many factories could be leaving China, how quickly, what he's heard, what percentage of output compared to pre-coronavirus levels the factories are at. But I don't think they're anywhere near 90%, as some financial professionals in the West on Wall Street believe. Okay, this is not the end of the nightmare, says Iris Pang, Chief Greater China Economist for ING. Back to the article. Okay, the CNN's reporting propaganda here that there's now been more reported cases outside of China than there's been inside of China. Again, I don't believe that stuff at all. And retail sales, according to experts, are in China are also likely to recover very slowly, as some major Chinese cities have reported imported cases of the coronavirus, and consumers are still wary about going into shopping malls and restaurants. And I have another article from, let's see here, February, end of February. That virus hammers China's February economic activity. I won't read it, but I think you get the point here. Meanwhile, China's currency is back. The exchange rate for the yuan to the dollar is back above 7. So a lot of experts, like my friend Daniel Lacalle, Tavi Costa, hedge fund manager Tavi Costa of Crescott Capital, that I've interviewed. I've also interviewed Daniel Lacalle many times. They're expecting a pretty large devaluation of the yuan against the dollar in the near future. So over 8 million China Mobile customers canceled. Interesting. No, I'm definitely not buzzed. I haven't had a drink at all. I have health problems, dude. I don't even drink that much anymore. You need a permanent timeout. That's disrespectful. Okay, let me take a look at the super chats and we'll wrap the show up. Chris says, how do you think until inflation is seen? Chris, are you in the United States? Because if you're looking at the government data, you might not see inflation at all. I encourage you to either take a look at the Chapwood Inflation Index by Ed Batowski. I think it's chapwoodindex.com, or John Williams of ShadowStats. And Ed Batowski's Chapwood Inflation Index is more in-depth than John Williams of ShadowStats, his inflation data. So he spoke to his methodology. I interviewed him years ago. He spoke to John Williams of ShadowStats, and then he went more in-depth. So the Chapwood Inflation Index actually is saying that there is a lot of inflation already in the U.S. There's pretty bad stagflation in all the major cities for years now. And that's why there's stagflate and tax and lie, and people's dollars get them less. So I'm not sure why you think there's no inflation, Chris. Are you just waking up now? There's been a lot of inflation for a while. 10 years ago, when I used to go into Target or Walmart, I could fill up a whole shopping cart of stuff for like $70, and that same shopping cart now to fill it up is about $180, $200. And I didn't go to college that long ago. It's under 15 years. Super chat from JB. Well, thank you for the super chat, JB. Will a bright spot in this area of darkness be the contango situation for midstream and offshore storage? I heard Tracy Schuchart, Shy Girl, and Eric Townsend discussing this. I don't trade oil futures contracts, so you might want to speak to them. So there is opportunity there. I think I've heard the hedge fund manager Cuppy from Adventure Capitalist talk about this too. So people are kind of like getting shipping companies and trucking companies. Their fees are going up because a lot of like Walmart and Target and grocery stores are hiring more truckers to make runs to grocery stores. That's the trucking rates are going up, even though people aren't ordering more trucks, but the rates for the truckers are going up. So I don't focus on, trading futures contracts, but it does sound like I did listen to that interview with Tracy Schuchart and Eric Townsend. It does sound like there's an opportunity, and she was joking on Twitter about going half-seas on an oil tanker. Again, not something I'm going to do. If the oil refiners are slashing just to sell their gasoline and other products, if they're cutting prices, discounting that much, there's going to be a lot more pain. Now, in the futures contracts, you may be able to hedge some of this pain more, but the pain for the oil producers and the refiners is far from over. We haven't seen dividend cuts besides Occidental Petroleum yet. It looks to me, based on the dividend payout ratios, even these large super oil majors that have never cut dividends in decades, that have raised dividends for a very long time. For some of them, I think Royal Dutch Shell for 40 years. I think they paid a dividend, and I think they've tried to grow the dividend. I don't know if they've grown the dividend 40 years offhand. I can't remember. But, they've been consistent dividend-paying companies throughout all parts of the cycle, bull market, bear market, sideways market. But this bear market in oil is so bad. I mean, rationally, I think these companies, because they don't want credit downgrades, about two of them in a very short period of time, like ExxonMobil, and then go and borrow another $8.5 billion anyway. You don't want credit downgrades. You don't want to start that vicious cycle even more. You don't know how low oil prices are going to go. This is a falling knife. Demand for oil and gasoline and jet fuel jet fuel demand in the U.S. has already collapsed. But gasoline demand could fall a lot here in the U.S. too. And same thing with the European Union. And there's other infected areas, like I was just reading Africa and others and other emerging markets that are going to get massive outbreaks. Some of these areas don't even have enough test kits yet. The U.S. doesn't really have enough test kits yet, but when the U.S. tests more, I mean, look at how many people are getting the numbers with the amount infected now. So oil is a falling knife. There's blood in the streets. I think there's going to be a lot more blood. I think some of these large companies should be smart and focus on not issuing any more debt, on paying off debt, raising cash. I know this sounds like conservative and boring, but that's how smart businesses used to be run. Not when you get a credit downgrade going and borrowing another $8.5 billion when you already have a leveraged balance sheet, and then you're worried about another credit downgrade in the next couple weeks. I'm not saying ExxonMobil is going to go bankrupt, but don't be surprised if they cut their dividend. They may have to. We don't know how low the oil price is going to go. Okay, whose super chat is this? Let's see here. Daniel Ashby. Thank you for the super chat, Daniel. I appreciate it. Wonder what percent of the 8 million canceled phone plans were cut off by the Chinese Communist Party to silence people. I don't think the phone plans would be cut off. I think the Chinese government would maybe fine them or force them to still pay some money, and then they would get blocked. People are shadow banned in China. People are blocked on social media. Look, China Mobile needs that cash flow. China Mobile's balance sheet, like their official... By the way, these Chinese state-owned enterprises are not legitimately audited. Go and look at Emma Molman. I have her article, I have her article on the Wall Street for Main Street Facebook group from a couple months ago. She wrote an extensive article about accounting fraud in many Chinese companies, and they got an exemption from past different Congresses and presidential administrations where Chinese companies listing on American exchanges do not have to comply with stricter audits. So basically, the public financial statements that they release, so like China Mobile, the balance sheets of these companies with debt and assets and cash on the balance sheet, it could all be fictional. But the balance sheets for like a telecom company for China Mobile are still high. So I don't think that they would voluntarily cut 8 million customers of dissidents that posted on Chinese social media about their coronavirus problems, because that would risk a lot of their cash flow. And the Chinese government does not seem interested in doing a bunch of different bailouts. They don't want to bail out everyone, because I've heard a ton of sad stories out of China based on the coronavirus, with working families that were out of savings, that ran out of savings, businesses that ran out of savings, families that could not feed their kids and put them in an orphanage hoping that they could come back a couple months later and pick up their kid, that the orphanage was going to feed them food. Just a ton of heartbreaking stories. So everyone expected, my point of saying these stories is that everyone expected, including most of the people on Wall Street, that the Chinese government would just print the money and bail them all out. And that is not exactly what happened. Everyone did not get a bailout in China. Now, people did get some food subsidies, but from what I've heard in Wuhan, there was only short periods of food subsidies, and that so much money was being wasted, and so much of the food on the food subsidies was being bought so quickly that the food subsidies, I think I've been talking too long, food subsidies were taken away. Chen Mika, thank you for the super chat. I appreciate it. Okay, well, I think I covered pretty much everything that I wanted to cover. So China is still dealing, things are improving in China, but nowhere near the 90% levels that some people think. Otherwise, you would see the commodities rally. When China does come back online, you will see the commodities be impacted first. That would be my educated guess. So you will see natural gas prices rally. You will see oil prices rally. You will see probably copper prices rally. So China is not back online anywhere near the levels. I have not had a chance to check the Adidas numbers versus what the CEO said on Adidas said on business television. I suspect he was probably embellishing things, because CEOs go on business television all the time and they paint this beautiful bullish picture, no matter what's happening behind closed doors or beneath the surface. Not all CEOs do that, or senior executives do that, but a lot of them tend to do that. Okay, another super chat here from Chicky4Noobs. Thank you for the super chat. He says, I don't understand the paper and physical silver pricing disconnect. Why can't miners bypass the paper price and sell at a physical silver price? Okay, it's a very good question. Okay, so this happened also in 2008. The difference, okay, so it sounds like you're not familiar with how miners actually sell their silver. So they have to sell their silver. They don't go all the way in manufacturing the silver bars you buy at the bullion dealer. They make doré bars, which are basically silver and gold together that have to be refined even further, depending upon what 4/9s, either it's 4/9s for kilobars for gold, or other products for silver rounds, silver coins, silver bars. So the miners, Chicky for noobs, the miners only make doré bars. So that is not a full value in the value chain, and the doré bars are then shipped to the refiners, who haggle with the miners. Normally they try to say, oh, you produced this doré bar and this one was impure, and we're going to demand a 1% discount or something like that. So the doré bars, this is why the miners cannot sell directly to consumers. This is why the miners cannot open their own bullion stores normally. Now, First Majestic Silver does have their own bullion store, and I think Pan American Silver did have a deal directly with Northwest Territorial Mint before it went bankrupt for other reasons. There was some, I don't want to go into the Northwest Territorial Mint stuff. But the bottom line is that the miners in general sell to the refiners. And then the refiners then take that silver, and then that goes onto the COMEX. So those are the bars that are finished that you buy on the COMEX. So the miners do not complete the entire manufacturing process. It is the refiners then who are involved in this as well. And then the wholesalers, and then you have the bullion dealers after that. Yeah, but a COMEX contract is not a doré bar, though. So a COMEX contract is not for doré bars. So if you go down to your local coin dealer, you're not going to be able to buy doré bars. You don't want doré bars either, unless you want a doorstop. Doré bars are enormous. You can look them up. They're interesting looking things. They're a weird amalgamation of colors. They're heavy. They're super heavy. But yeah, you're not going to be... They don't sell them on the COMEX. So the miners are not completing the steps all the way. So if the miners actually finished bars... Now, First Majestic Silver is not doing it efficiently. First Majestic Silver is not offering normally silver bars at the lowest cost compared to other bullion dealers. So you would have to convince the refiners to not sell anything onto the COMEX too. So not only would you have to get the miners on board, you'd have to get the refiners after they refine the doré bars down to all the products that you buy at your either wholesaler or coin dealer. You'd have to convince the refiners to be on board too. And all these businesses are not making good margins. Okay, a lot of bullion dealers not doing that well financially, even though they're selling a lot of gold or silver. Well, now they are because they're collecting premiums. But normally, bullion dealers do when there's not premiums, they're not doing well financially. There was a ton of bullion dealers that went bankrupt. A ton. For a bunch of different reasons in the last 6 or 7 years. You had Tolving, you had Northwest Territorial Mint, you had Bullion Direct, you had other bullion dealers go bankrupt. It's normally a razor-thin business. And there's not that many large precious metal refiners anymore. There's been a consolidation. So the refiners of precious metal who buy the doré bars would have to be on board. So not only would you have to get the miners on board to avoid the COMEX, you'd have to get the refiners on board too. Troy says some silver doesn't get refined to 4/9s. Industry doesn't need that level. Correct. Correct, but normally when you get a COMEX contract, most people think that they're getting a ton of bullion dealer quality silver. Radar NJ, thank you for the super chat. He says silver miners should team up and buy a refiner and sell directly to us. That's an interesting philosophy. It's not a horrible idea. What I think the silver miners should do instead is not do bad deals, not do bad acquisitions, not drastically leverage up their balance sheet, and they should either save the silver and not sell it. If they have a better balance sheet, they wouldn't be selling the silver at the current paper price now. They would be holding it. So if they had cash on the balance sheet, they could wait it out. And unfortunately, that's not, the silver miners can't do that. The silver miners don't lock in a lower oil price. The silver miners are so poorly run. There's so many problems with them. And then on top of that, you have the majority of silver, annual silver supply is from base metals. Base metal miners. I think it's about 2/3. Almost different estimates have between like 2/3 and 70% of all annual silver supply is from base metal miners. So copper miners, iron ore miners, the silver is byproduct. And those guys don't care about the silver price. They will, if the bankers will give them better financial terms on loans or other deals, they will give the bankers tons of silver. Or they'll sell the silver to Wheaton Precious Metals or Franco-Nevada on a silver stream, which is good for the streamers. But then the miners, sometimes the miners do bad deals on that too. The silver miners are poorly run. That's what most people need to understand. The gold miners in general are poorly run. The difference now is that the margins are better for gold miners right now than silver. Because on a percentage basis, silver has crashed way, way more in the last 2 months or so than gold has. And if oil prices were not falling, the silver miners would be looking at bankruptcy in the next couple months. Maybe they have more time than just a couple months, but silver needs to rally soon. Because there is, even when silver was at $18 an ounce a couple months ago, there was not a lot of capital available. And you had some miners still having production problems 2 months ago when silver was at $18 an ounce. Hopefully I answered your question all right. So yes, I see the frustration from everyone why they have to pay the premiums to buy the silver. I'll just tell you what David Morgan did. David Morgan, the silver guru, what he did in 2008 was he was able to get 1,000-ounce bars, and then he knew refiners. So he bought 1,000-ounce bars right around the spot price, and he did not pay the premium. And then he had refining contacts, and then he got the 1,000-ounce bars melted down into rounds and bars, into smaller bars. So 1 ounce, 5 ounce, 10-ounce bars and rounds. And then David Morgan collected the premiums, enormous premiums, like what we have now. Well, they're larger now than they were even in 2008. Premiums are above 60%. On eBay, I think it's 60%. And on other coin dealers, it's even more. I think AppMex is, on some of the stuff that they're not out of, I think some of the premiums were even more than that. So David Morgan collected an enormous amount of premiums. So for a short amount of time, he made an enormous amount of money. Now, not everyone can do that, though, because you have to know the refiners, and you have to get them to agree to take your 1,000-ounce bars, and you have to negotiate probably that maybe they're going to get a cut of that. And David Morgan also knew how to sell those silver rounds and others that he melted down. He knew bullion dealers, so I'm sure he had already negotiated to, after those 1,000-ounce bars were, recast into smaller amounts to collect the premium, he had already negotiated a deal with one of his bullion dealer friends, so those would be put in inventory there and then sold. So this is a guy that has, he's been in the silver industry for decades. He knows the industry well. He has a ton of contacts, and he leveraged his contacts to make very big profits off the premiums. Not everyone could do that. In fact, most people can't do that, because you're looking at 1,000-ounce bars to buy them, or COMEX contracts that could take months of delivery to get spot prices without the premium. Okay, super chat from JB. Thank you. Another one from JB. China's largest trading partners are all in lockdown. It's mathematically impossible for them to be operating at 90% crisis levels. I totally agree, JB. but I'm seeing this from hedge fund managers and others. It's just ridiculous. These are mainstream guys, though. So they believe that China's recovery is real. I don't believe it. So I believe China is slowly recovering, but it's nowhere near the levels that people are claiming, that some people are claiming. Okay, I think I have one more super chat here, and we'll wrap it up. Let me get some water first. Vajra, thank you for the super chat. I think he's also a Patreon account contributor. One of my over 500. There's a lot of good research behind the paywall there for only $5 a month if you want to try it out. He says, my bullion dealer in Portland, Oregon has 3,000 ounces of silver, limited 100 per customer, $15.44 for 1 ounce silver rounds, affordable jewelry, and precious metals, Portland, Oregon. Google it. Do they have an online website? It's probably local only, right? There's no website. There's no e-commerce. Troy says the workers, and this will be the last one here. Troy says the workers could be at work but not producing anything. So the danger then is that obviously been talking for too long. The danger is that mass gatherings of people will increase the odds again of getting the coronavirus. So people getting reinfected, a second wave. And there's been reports for at least the last couple months of lots of people getting the coronavirus a second time. This is why the U.S. is so worried why the phrase social distancing is repeated. Because there will probably be second waves here in the U.S. Yesterday, Lawrence Lepard said he thinks everything could be over here in the U.S. in 6 months. I think that's way too optimistic. I think probably at least 12 months, and that may be optimistic too. There was Chris Martinson reported this in the last couple days. There is a leaked U.S. government document that was the New York Times got a copy of, and the federal government is expecting an 18-month crisis and people to get reinfected second time, multiple times. Some people to get reinfected multiple times, and shortages of important things for consumers. So that's what the military is preparing for, unless you think that the New York Times is lying about that too, which is a possibility because the New York Times does have a really shitty record now. I forget what the funny nickname is. It wasn't President Trump. Someone else called them the toilet paper of record. I forget who. I think it's Gerald Celente who calls them the toilet paper of record. But this might be a time where their sources were actually correct. So 12 months, 18 months, it's going to be pretty rough. Maybe we're wrong on these estimates. I hope I'm wrong. But the Fed is going to continue to print way, way more. The Fed is going to intentionally print to try to weaken the dollar. And yet here we are, dollar index still above 100. My friend Bren Johnson expects dollar index to go to 120. If the dollar index goes to 120, the amount of bankruptcies you're going to see is going to be insane. And with that, I will wrap things up. So thank you very much for listening. All these articles will be in the information and description section if you want to take a look at them. But bottom line is that China's economy is nowhere near 90% of pre-crisis levels. Now, things are improving in China with some factories. I've heard some anecdotal stories of 50% returning to 50% pre-coronavirus production levels, but not all. And there is car traffic in a number of major cities that is improving. But the pollution, which normally electricity usage and pollution, which tends to track factories, there's these articles, I have multiple articles here, that the Chinese government officials at all different levels, at the city level, at the provincial level, and at the Beijing level, are ordering people to fake it, to make the economic data look a lot better than it really is.